The stock market bullish percent index is once again above 70, but what does this mean for day traders and investors out there like you and I? Hello, ladies and gentlemen, and welcome back to the Daily Show where we talk about markets around the world, including stocks, commodities, and cryptos. Well, it turns out that this earnings season, we kick off with survey results showing that fund managers are still mostly bearish, but it looks like we're climbing the wall of worry thanks to one thing, and that really turns out to be AI. Microsoft stock popped 4% with AI tool positive surprise. We all know that this is going to be a big hit for corporate profits over the next decade, as basically managers are able to fire certain staff and reshuffle to make more efficient businesses. But on top of all of those things, what are banks doing better than anything else? They're building their cash, and the market's liking this at this stage, and it looks like we're in a very good point. But are things about to change as we approach these key critical levels? Today, we take a look at some of the dark pool activity that's been going on and some big trades and some leveraged funds that just happened over the last 24 hours. Let's get into it all together right now. Well, welcome back, everybody, to the Daily Show where we talk about macro leading indicators and the hottest charts. We've got a big show coming your way today, so if you enjoy markets around the world, remember to subscribe and smash that like button. Let's begin with rotation. Healthcare doing pretty well on this day. We talked about it on our weekend video as a bit of a defensive sector that looked like it had some momentum behind it. We've also seen banks do pretty well during earnings season. You can see here all of these banks absolutely ripping, and Nvidia, Microsoft, and a few others having some good sessions. But let's talk about volume underneath the hood. Well, a few things were occurring, and they're all dark pool transactions. The first one is junk bonds. We saw junk bonds have another big print. Now, in fact, this is a print that's happened before at a very similar price that led to a sell-off. Will it do it again? Interesting level there. Then we move over to the markets themselves, specifically ahead of earnings. We've got the triple Qs, in this case, the short Qs, showing us a big read. Is this because people are just about to go short markets, or is this just a huge transaction out of nowhere? Well, it also shows up in the ProShares Ultra Triple Q as being another large transaction. In the sizing here, we've got the T Triple Q looking at 1.2 million shares and the S Triple Q looking at 3 million shares. So it's no joke. There's a lot of transactions going on ahead of earnings season. And as we talk about earnings season, what are their expected moves coming out of these markets? Well, first up, let's have a look here at what the options were presenting this week in terms of implied moves. They've got it a little wrong so far. Charles Schwab was expected to move about positive minus 5%. Well, it moved about, 12% positive, I think, after the result. Netflix is expected, however, to move between 8 and 10%. That's a huge move. Same with Tesla. So be prepared if you're a day trader out there for at the close of Wednesday, some huge moves in the aftermarket. This is what makes it exciting during earnings results, but never discount the options market telling us what is expected. And if you don't know this, you need to be subscribed to this channel or at least have a service like that. Netflix earnings moves, as you can see here, average past moves on the releases were massive, plus minus 9.3%. You need to be paying attention to these standard deviations and be aware of the risks, again, going into those points. So these are some of the records. Pause the video if you're interested in having a look at that. Now let's move through earnings season. When is the real time that we need to be paying attention to earnings? Well, generally up to around August 7th. By that time, we've seen 80% of the S&P 500 equity cap report. And remember, if you're interested in finding out more about these things, follow us over at FX Evolution on Twitter. We'll be talking about this and many other things. We just posted that one over there yesterday. Let's talk about ERP. This is pretty much the big discussion point of this earnings season. And at the moment, equity risk premium is presenting a pretty bad number. Does that mean markets go down? No. It's more of an investment philosophy. And you just need to be aware that it's there so that if things start to go bad, you know what's happening. ERP presenting negative 7.2%. If you're not sure what it is, watch our previous video. We've talked about it before. And then for Tesla, have we just seen the Cybertruck come out? Take a look at this. I love this one on Twitter on Tesla's post because everyone's playing like Where's Wally, if you know what that is. They're looking in, zooming in on seeing what everybody in the crowd is doing in terms of the workers. But it looks like the Cybertruck is here. I'm excited to see some of these driving around America when I come over there later this year. Maybe they'll deliver. Who knows? I'm not too sure. Let's move over to the seasonal data. What's going on there? Well, we've got an area that is incredibly important. Markets are driving higher. At this time in pre-election years, over the last 25 years, we've obviously seen a turning point. Have we got one yet in price action? The answer is no. Are we looking for it, I guess? The answer is yes, we are looking for it. But at this stage, we don't have any more information. We just know that this is usually the next 2 to 3 months being the weakest periods of the year. It also computes when we take a look at the NASDAQ having a 20% first half. What tends to happen? Q3, it can be good, but it's usually down or lackluster. So that means that there's usually a dip in Q3. At what point? Timing will be everything. Just pay attention to those stats and understand that they are there. We've also seen Bank of America and many other reports come out and say that June CPI print is likely the last favorable year-on-year effect. Interesting, because most people are now calling for it to go all the way down to 2%. Do remember, with all inflation, it generally has one spike in it on its way to improvement. This is what you're looking for. Potential catalysts for the market to freak out. Yep, that could be there. Also do remember that liquidity at the moment from central banks isn't really supporting this move in the markets. It doesn't mean it can't go higher. It's just something we have been following. It's been incredibly disconnected for so long now. Let's move over to the options world. What's going on in the wonderful world of options? Well, there were a couple of good reads. Caterpillar came in 2.5% up. We saw Netflix moving heavy into the result. And of course, we also have a whole bunch of other pretty unusual stock market moves. And in particular, they were options through Microsoft, options through things such as Blizzard, though I'd probably stay away from that one. And of course, we also have United Health Group and a few other new kind of stocks coming through. Zoom was also there, but we didn't get a positive day out of that. That's a stock we've been following pretty closely here. That and PayPal in terms of some of the more likely, I would say, plays in the markets in terms of these hyper stocks going through. 40 million, pretty much the same. 61% calls. This has been the same now for a few weeks. We've always seen a ton of options coming through, 0 DTEs and weekly options, generally all towards the call side. Are we in euphoria? Most likely. When does it stop? Again, we need the price action to confirm that. Let's go to the last 5 days of trade. The number one sector is no longer gold. Although it did do well in the last 24 hours, it is now regional banks, thanks to these earnings results looking pretty good. What are the worst sectors? Take a look down here, defensives and energy. So demand destruction might be coming through. Metals and energy in general looking pretty weak, but we haven't seen a pickup in utilities, in staples, in the markets that generally bring with it a decline. And what that means is that Wall Street is not moving defensive into this bull run. We need them to do that. They have not done it yet. The last 24 hours was really about, of course, regional banking and banks in general, and then gold did very well as well. GDX coming through. We do like the shiny metal at this stage, and we probably like it for at least another month or 2 months. So before we jump into the charts and we take a look at all of the key levels you need to be watching right now, I want to quickly talk about the S&P 500 bullish percentage index. Again, we've gone above 70, and this is usually a fairly strong read still, as any oscillators kind of are, until it goes back below. It's the cross that we're looking for below 70 in the future. Make sure to subscribe if you're interested in following along on this chart, as it's been a pretty good read throughout 2022 and so far in 2023 from both the bullish stance and, of course, the bearish stance of turns. We will be watching this one, and of course, we'll combo that with the S&P 500, hopefully with some price action later on. We always need to be watching the US 2-year. We've talked about it plenty of times. We'll skip over this. 5.1%. Make sure you set your alerts. It's going to be a very important level. Let's move over now to Magma. Magma continues up. However, we did get a TD13 exhaustion read. Could that be the end for the Magma run? It's possible. Again, no turn point just yet. Still a bullish trend. This is almost now at all-time highs. So it just shows you how much we're being led by those big Microsoft, Apple, Amazon-style stocks. Though I do think Amazon's probably reached its peak around this point from a technical level. Let's look at the skew. It got crushed again. That's good. If you're a bear, you're looking for technical signals now. Again, we expect the skew to get crushed more and more and more. And ideally, the market is going up and the skew's getting crushed. Then we see a turn point. We know what to do if that occurs. RSP equal weight, looking good. Market breadth in general improving into this earnings season. HYG or JNK, so if we have a look at junk here, we'll just load that one up. You'll notice they're back at resistances and back at large trade areas. So just remember, as we saw at the start of this video, we've got large trades going through the markets at these kind of points. And the same thing's happening on SQQQ. So let's have a look at SQQQ. It's absolutely in the dirt, and there's a huge transaction out of nowhere at this point. Now, what could that be? Well, I believe we're going to see the price action potentially show itself over the next 1 to 2 maybe days. And if we do get it, we'll know what just happened. A big player got in big time. Now, if it starts to ramp up, we know what they're doing, as in they're basically going short on the markets. And if it keeps going down, well, that means they're just entering more positions to push this market. And we're very interested in the reaction. Remember, I said patience, react, don't predict. We don't know what it is yet, but we will be looking very closely. Central bank liquidity, very far away from the market. Gaps everywhere in this market at the stage. Unusual. Haven't seen that many gaps before, but again, markets can stay irrational for a long time. Demand destruction, copper is usually our read on this, which basically means the economies are weakening around the world, even though the markets aren't. Yes, it looks like copper is weakening. If it takes this low down here, set an alert, that will be important. And of course, that will probably lead into weakness in energy sectors as well at that point. We've talked about 12.12, the gap fill from 2020 on the VIX. All gaps fill on the VIX eventually. I believe that's the statistic. And at this point, we're looking at the VIX dropping down into 12.12. Could that be the catalyst? Keep the alert there. Be very well aware. We had an alert down here, and it led into a bit of a dump in the markets and, of course, a spike in the VIX. Now we've got our second level just in case it does hit. Treasuries, nothing to update there, just in the middle of nowhere land like we discussed in the previous video. And dollar index actually did exactly what we thought. Took the lows, perfect, and now we're rallying up. We're looking for a dollar to move through 99.86 to see some recovery strength, and this is the type of thing that I'm expecting it to do, going back to 125 or even higher. It was sold so aggressively that if we do start to see this pickup trend, although it's a counter, you're looking for the previous bases on things like a 2-hour chart, and it's basically drop, base, drop, look at those supplies. That would be where we're targeting. We'll watch this very closely. You can see here on the daily, it's like a rejection candle, kind of like a hammer or pin bar that's showing you that someone took the lows and they did buy it up. Gold's doing well regardless of what the dollar is doing at this stage. It's rallying up higher and higher and higher. I do expect there'll be a pullback on gold at some point, maybe if dollar does end up going better, and that could be an opportunity. I also think big traders came in pretty hard on gold last week. We'll update you on our weekend video on that. As I promised, I think they're there. I just don't have the hard proof just yet. What about ARK? We saw a big print, very slow in the couple of days that we've had pretty bullish in markets. So ARK got a big print on it. We sold off. We're still floating around this trapped zone. We'll report back when we see that. NVIDIA, we're watching it like a hawk. If you're in it and you're long, no reason to be scared just yet. We're looking for the signs. We will pay attention to NVIDIA this earnings season. And as we kick off with other semiconductors, I think NVIDIA could get pretty wild. So expect some big moves there. Tesla ahead of earnings, 293. A lot of people want this thing to hit 300. This is going to be a big earnings report. And as we know, although we already know the shipment details, 300 is the target almost everybody has. So I'm very interested in reporting back to you in the next 24 hours on that one. What else have we got? We've got Disney, of course, breaking to new lows recently. The pickup, so the rally there was weakens throughout the day. I think Disney's probably going towards 84, and then will it get to 78 or something like that? Possibly, but it does look like that was a weak session put in for it. XLE energy rallied, then dropped, showing you that this is still a weak market index. In fact, this is the rally we'd hoped for, then a bit of a sell-off. I do expect energy to potentially weaken here over the next couple of days. And then we've got healthcare that's doing a lot better. You can see here, healthcare got that island reversal, sold off. Nice momentum day for that, 0.74 up, which is not too bad. It was pretty much in line with the market. ASX 200 stuck in the middle of the zone for the Australian viewers out there. Nothing much to report here. It's just kind of waiting for the US market to tell it what to do. The DAX rallied back up to this critical level. If you've been in it and you broke even the trade that was around here, well, you would have lost that over the last 24 hours. Don't worry about it. I mean, of course, if you had taken it off, you would have been up 2.8 to 1. I think with these things, you've just got to wait for the next, big move. And we'll be watching DAX incredibly closely. If it takes the high, well, it's probably going to continue to move up for a little period here. Something to watch. US 30, the Dow actually broke out on the daily. Now we look to the weekly to see whether that's a real break or not. Very important earnings results, very important price action over the next couple of days. The Dow slumbering, now actually broken out. Is that momentum? I don't know yet. US 2000 continues its great rally up to the highs here, 2000 being the target for most bulls and a very critical level approaching for the Russell. The NASDAQ hit a TD9, so again, exhaustion on the weekly. I just wanted to show you guys this. Doesn't mean it turns, doesn't have to. It's only an indicator, but another exhaustion technique and absolutely no weakness yet. Did we go below this red? No. We didn't. We're needing that to get taken out. Otherwise, we just really can't do much with it. So certainly not hitting those levels just yet. US 500, same kind of thing. Into the critical resistances. Went past my 45.30, 45.40 zone. Showed some weakness, but no real turn. And if we go down to the 2 hour, we're looking for the market to go underneath 4,500 to show weakness. At this point, it just doesn't have it. It needs earnings to really underpresent what is going on in the markets. Bitcoin at the bottom of the lows for bulls. They'll be looking at this price saying, ooh, I like that price. Is there a switch? Probably not yet. 30,500 would show us that buyers are back in control here, and you could maybe look towards that being a rally point. But at this point, it is just really you're saying, okay, this is support, I'm going to buy the support. Is that going to be worthwhile? Well, it's stuck in a range. Bitcoin definitely not playing catch up to the NASDAQ yet, though I believe it will later on this year. In fact, Bitcoin stocks are doing better than Bitcoin itself. We did get the core retail sales result. I thought it was pretty bad, 0.2% instead of 0.4 and 0.5. Markets doesn't seem to care anymore. Bad results, good. Good results, good. Everything's good. That's how the market's trading, a bit dodgy. Thursday, we've got unemployment claims for the US, and then Friday, not much news. So it really is earnings, earnings, earnings. Make sure to pay attention to that, guys. Make sure to subscribe if you enjoy the content. And of course, we'll see you in the next video. Thanks so much for watching. Bye for now.